So, yeah, let's just delve into today's trade. We, of course, saw negativity coming through for the Nigerian market into last week. Are you expecting a better performance this week?
Yes, we saw today there was a 0.7% growth in the market. So I'm expecting better performances. GT released their numbers at the end of last week, so did Access Bank, and those numbers were very good. We saw GT Bank do 35 or 37% PAT and a 35% PBT. And we saw Access Bank do a 25% PBT and about a 50% profit after tax. These are very good numbers. This is showing that the synergies of the mergers are coming into fruition, and that's very good for the market. We also saw great dividend yields from Okomo Oil. This is a palm oil and rubber production company in Edo State, and they had 20% dividend yields, which is unheard of anywhere in the world, which is really good. So we've been seeing great things coming out of the market from Friday to today. So we can only be optimistic.
Absolutely. Well, FCMB also coming out with its numbers today after profit warning into last week. What is your overall stock picks within the banking sector? And many think that now the worst is behind a lot of the issues that we saw last year and the preceding year with regards to the rescued banks.
When it comes to stock picks for the banking sector, the easy choices to go with, of course, are GT Bank. Great cost control, a great strategy, good management team. You can also go with Access Bank. They've grown larger. The merger has created a bigger institution, an institution with a wider reach. They're definitely focusing on cost control. You can see their NPLs, their total loans are under control. Operating income to operating costs are going down if you adjust it for the AMCON costs. So Access Bank, GT, good choices, definitely.
Yeah. Okay. So monetary policy announcement. Of course, we had the inflation number coming through, and also the MPC meeting starting today. What kind of movement are you expecting into tomorrow, Akinola?
Yeah, we have to look at it from the point that what the MPC is trying to figure out is how it's going to balance out economic growth with the inflationary rate, and they have to look at various things such as the budget deficits. They have to look at we've been having declining oil prices. We've been having the fuel subsidy removals. So I see it going upwards, but that's a personal opinion. I definitely see it going upwards. With all the economic constraints we've been facing in Nigeria, the consumer products importation, all these definitely put in some strain on on inflation. So I definitely see it going upwards.
So Akinola, sorry, just to confirm, are you saying that you're expecting an interest rate hike going forward and much higher inflation rates also, or do you think that even if inflation starts to stay in these double-digit numbers, we could actually see no movement coming through from the central bank?
Yes. If today, as of today, the inflation rate looks as if it's 11.9%. At the end of last year, the height of the inflation rate was about 12%, and the moderate rate was at the moderate level was around 10%. So it could definitely stay flat. So we can expect it to stay flat if all things being equal.
Okay, so Capital Markets Authority as well, we're seeing quite a lot of reforms and probes coming to the fore, and has a lot of investors also just looking at the overall environment in Nigeria. Do you think that this is all net going to be positive for investor sentiment?
Yeah, right now it's I don't know. It's looking negative for investor sentiment because of the issues that are being discussed. The issues that should be discussed at this capital market probes should be ways to push this market forward. How do we get more companies listed? How do we improve liquidity of corporate bonds and subnational bonds? How do we get the bigger corporations to list, like the MTNs? How do we get them to list? How do we put those reforms in place that are going to push investor confidence? But on the floor of the House, we're seeing a lot of squabbles, a lot of exchanges, and we want an actual framework, an actual plan that can boost investor confidence. So then the House needs to show this.
Akinola, are you expecting that to occur though into this year? Because we all know that investor sentiment is relatively low, and we also see the retail investor perhaps sitting on the sidelines and not so much convinced that this is now the right time to buy into stocks, and even given the fact that we see very attractive valuations across the board.
Yeah, it's going to depend on how the next couple of days of these capital market reform committees go. If they start to focus on the issues and start to put together an actual framework and a plan, investor confidence is going to get boosted if they start providing a framework whereby the companies, the bigger oil companies and the telcos are going to list, and they improve liquidity, improve capital raising procedures, definitely investor confidence is going to get boosted. But if they don't put together the discipline framework to get this in place, it's going to be a problem, and it's going to be a very huge problem. So we expect investor confidence to get boosted.
Fantastic, Akinola. We have to leave it there. Thank you so much, sir, for joining us.